Greetings and welcome to the Wealth for Real YouTube channel. I'm your host, Christopher Anastasio. It is Thursday, December 28th, 2023. And in this video, I want to talk to you guys about the commercial real estate distressed situation that I brought up in a couple other videos lately, and specifically a retort that I got on a TikTok video about this very situation saying, yeah, no worries about commercial real estate. I'm paraphrasing. They're just going to refinance and move on. And this video specifically is going to address that point about refinancing the commercial real estate and why that does not appear, let's put it that way, to be an avenue to create relief for this sort of growing issue, this growing problem in the commercial real estate sector. Now, just the setup, guys, to back up for a second. Had made some content both here on the YouTube channel, but also posted a graphic from Alex Conti, who I follow on X, Twitter, that I just posted that photo to TikTok. Got about, last I checked, about 6,000 views on it. That was as of like this morning. And let's specifically talk about that graphic. The graphic was, I do think you should see a day or two before this. You should see a YouTube video on here where I spoke more in depth about that graphic. I just happened to post the graphic alone on TikTok. But in that graphic, it was basically showing that $2.8 trillion of commercial real estate debt was maturing between 2023 and 2028. So over a 5-ish year span. And it was showing how the lion's share of that debt is held by banks, not collateralized mortgage-backed securities, not government enterprises that guarantee it, but the banking sector, okay? Which we know in the Great Recession in 2008 was heavily decimated by issues that arose in first subprime and supposedly subprime only, but then spilled over into the larger housing market. So with that as a backdrop, and those metrics that I just mentioned from Alex Conti as an additional backdrop, had posted that and was kind of pontificating like, hey, what does this mean for the commercial real estate sector itself? It looks highly vulnerable. It looks like it's under a lot of stress. It looks like it could blow pretty spectacularly. But, kind of wanted to throw that out there and see what you guys thought of that. But even more so, trying to think ahead to, let's assume for a second it is a problem, and a very, very large scale problem indeed. What does it mean for the larger economic picture? In other words, is it subprime 2.0? Is it a situation where you have commercial real estate eventually affecting other areas? So that question, guys, sort of reframing it a little bit, is like the last time around, 15 years ago, let's call it 2008. And it really goes a little further back than that. I think you got to go back into 05, 06, 07. We were told that there were subprime mortgage problems, but they were contained. And nobody saw any fault lines in the regular housing market, the regular home mortgage market. Nobody saw fault lines in the AIG type companies, insurance companies. Nobody saw fault lines in the banking sector until subprime volcanically spilled over into these other areas, and it became evident that the problem was not contained. It wasn't just a subprime problem. It wasn't as simple as saying subprime is bad, everything else is okay. So this whole thing that I had teed up in these last few pieces of content about commercial real estate was trying to ask this question. Is it just that we're going to see commercial, real estate implode, or are we going to see a more systemic effect? And I would vote for the second. I would firmly vote that we are going to see something systemic and widespread and large scale, because that is the system we have now. We have a very interconnected, interdependent, global financial system. You can't really just contain, one issue to one area and not see an effect propagate. It's just not going to work like that. It doesn't work like that in a system like the one that we have. So that's where I come out. But I just really kind of wanted to see what other people were thinking in terms of, where is this all headed and stuff like that. So that all leads up to the comment that I got from this TikTok user who said, okay, they're just going to refinance and move on. So that leads us to this article right here. Now, this article is a little dated. It's about 6 months old, but still relevant because it's on the doorstep or the precipice of this 2023 to 2028 maturity schedule. And you see the title right here. Borrowers could go begging when refinancing needs arise. Okay, so that kind of sums it up right there, guys. Now, let me say this. I responded to that TikTok user and I said, sort of acknowledging it as what would typically be the answer, just go ahead and refinance. But I said, something to the effect of they'll be doing that at rates 3 times as large as when they started. Do you see the problem now? So with a little more fidelity here, let's take a look at what this article says about refinancing. So you come down here, they talk about, okay, $400 billion is coming due this year, 2023, $900 billion the next 2 years. Of course, we know the 5-year look is $2.8 trillion. And it says here, the debt maturities are happening at a time of higher borrowing costs, falling prices, and increasingly risk-averse lenders, which will make refinancing the debt more difficult and expensive. Now, here's the interesting point, guys. I hadn't come across this before. I'd never seen this point before. Aside from higher interest rates, let me just go ahead and highlight it. Aside from higher interest rates, most real estate lenders are now requiring borrowers to add cash to pay down the loans as a refinancing prerequisite, which some property owners may be unwilling or unable to pay. So huge deal there, guys. I never even saw that before, never mentioned that before. I just thought, hey, yeah, they can go back and refinance. They're just going to be paying a higher interest rate, right? So this adds a little more intrigue to even that remote possibility that a commercial real estate lender would think it was a good idea to go ahead and refinance at these current rates. So what you have here is the result of this rocky scenario, investors could end up with lower than expected returns in their portfolios from higher borrowing costs alone. It goes on here to give some metrics about like the negative returns coming from this sector right now. Okay, I mean, look at here. Returns across 4 main property types, office, retail, apartments, industrial, expected to be negative, with the lowest produced by office at negative 12.9%. No shock there with work from home. And the highest by retail at negative 1.4%. So it goes on to say here, last year was an historic under repayment of commercial real estate loans. And then you have massive amounts of debt maturities in a year when interest rates have gone through the roof. There's no doubt we have a serious issue. And then finishes up here, lenders do have a very healthy willingness to refinance multifamily, self-storage, open-air retail, which have outperformed other sectors. But the question is how much money borrowers will have to pay on their loans and at what value. So note the fact that even this comment here, very healthy willingness to refinance, they're really talking about multifamily, okay, which is always going to perform better than the other sectors because everybody needs a roof over their head. So we're talking duplexes, quadplexes, eightplexes, massive apartment buildings, things like that. Self-storage. I personally have a self-storage unit, 20 by 10, cost me $578 a month or something like that. They raise the rates every 6 months. It'll take forever to get the stuff out of there. So that's a great sector. It's one I'd love to be in myself. And open-air retail properties. And I generally take this as like typical malls, enclosed malls, aren't doing as well as like, town centers where you have all the shops and restaurants. You walk outside and you can hit this restaurant over here and go to the store over there. So those open-air retail properties would outperform typically enclosed malls. Okay. But they're still saying here, even in those cases, how much money will borrowers have to pay on their loans and at what value? So I think, this is a really incredible situation that's brewing. And it just feels like 05, 06, 07, when there was that small percentage of people saying, wait a second, there's a problem out here. There's some rumblings. I don't think it's just subprime. But all the experts and all the major players, talking heads and whatnot, were saying, no, it's just subprime, until it wasn't in 2008. So this is where, specifically, guys, the refinancing of commercial real estate, I think, is an issue. And I don't think it's the way out that some people are saying it is, or might react to this situation and say, yeah, they're just going to refinance it like that TikTok user did. I just don't see that being a possibility here. So love to hear what you guys think about this. Love to see what your thoughts are on the matter as a whole, or what you're doing with cash. If you have cash piled up, are you going to try and buy, let's say rental properties now in this environment and just get ahead of the whole situation so you don't get, so you don't miss it later? Are you going to wait for commercial real estate to implode and assets to get distressed and banks to go under? There's just so many ways to go with it. So I would love to hear what you guys think about it. I would love to hear what you think about this particular situation right here, and go from there. So hope everybody's having a great end of year. This video should be out before 2024, but Happy New Year to anybody watching, and super, super, super appreciate the support of the channel. If you haven't already, please hit subscribe and follow along. Would love to have you. Thanks, guys. Have a great night. Until next time.